Back 22 points lower on the Nifty. We are at 11,650 as we speak. Let's get some global opinion on what we heard from the IMF and whether, that should weigh and in what way. Michael Avery is head of markets research, Asia Pacific at Rabobank. He's with us on the phone line. Michael, thanks very much. To your mind, what the IMF put out yesterday in terms of growth forecasts, lower growth forecasts, did that surprise you? And what, if any, will be the lasting impact?
Well, on one level, it didn't surprise me at all because it's quite obvious that the global economy is slowing, and the IMF are never really anybody you listen to if you want to get the leading edge of opinion on where things are going. They're very slow to react because they're a big bureaucratic beast. But what was interesting was what they flagged at the end when they said that this is a delicate recovery, which I think is putting it mildly, and if things go wrong, then on a country-by-country basis, we should be ready for very, very stimulative monetary policy to be conjoined with fiscal stimulus. So in other words, forget about the policy that we've heard about for the past 10 years during the recovery, which is try and reduce your debt. Let's build our debt up again, lots more state spending, and the central bank to make sure that that's affordable for everybody by buying those bonds, which is pretty much what Japan has been doing, of course, for decades now. And that's what the IMF is suggesting everyone will be looking to do in the future. Not a surprise to me personally. I've written about exactly that several times over the past few years, but it's not a particularly positive outlook if you're a traditionalist who thought, A, this was a sustainable recovery, and B, that markets were going to go back to something like normal in the near future, because clearly they're not.
Michael, specifically on India, we've been, the beneficiaries of a lot of FII inflows quite continuously in the equity markets over the past, maybe since the end of Feb. What is the view that global investors are taking towards India right now?
I really couldn't say, to be honest, because I'm not on the equity side.
Okay, but in general, what is the view, or where does India fall in the pecking order of emerging markets?
Well, again, are you talking on the equity side, or what particular asset are we talking about here?
In general, it could be probably across asset classes.
Well, I think it does, vary very sharply by what you're looking at. But, the sentiment, I think, at the moment is still that India is a growth opportunity, if you're talking purely in macroeconomic terms. No one's expecting anything other than a decent year's growth this year and next, which is a stark contrast to what the IMF was projecting for most other economies, and that's got to be good news. Our India analyst Hugo Erkan is continuing to say that the rupee is going to trade in a 68 to 69 range for a while, with occasional risks of a move towards 70, but 68, 69 is where he's still confident it holds for now. And as I said, from the equity front, I don't have any comment. I'm sorry.
Okay.
Yeah. Michael, you said if you're a traditionalist, then this is not a very positive picture. We've had non-traditionalists dominating for the last decade, and we got to a point where things were about to go back to normal, but it seems that we're now going in reverse. Is it possible this unconventional kind of situation where risk assets generally have done very well continues for a couple of years more before it finally catches up?
Well, that's a great question. Let me precede that by saying that what I would strongly urge everyone who's watching this show to do is, if you've got a macroeconomics 101 textbook sitting around at home with dust on it from when you were a student, or if you are a student and you're still studying economics, could you take your textbooks and could you burn them? Because they're nonsense. Utter incredulous nonsense. Really not worth...
I thought you were going to ask people to read it, not but go on.
Well, no, read it first, then have a laugh, and then burn it, and then do something creative with the ashes.
Yeah.
But once you've done that, then go back to look at the markets and ask yourself what's going to happen. And we have been living in this, fool's recovery for a decade now, where emerging markets have done quite well, developed markets have done well on the surface, whilst leaving behind about 60% of the population. And risk assets, as you quite rightly say, have done well because central banks have made clear that we have global socialism for the rich, where the rich can no longer be allowed to lose any money and the poor can. And that's basically what central banks have been aggressively doing. Now, what's going to happen next, to get to your point, it seems to me the IMF are arguing very strongly that we're going to have more of the same, which they're trying to dress up as actually an inclusive recovery, which is starkly hilarious when you consider what the reality is in most Western economies. Does that mean that you're going to get further uplegs in equities if you've got more central bank support? I think you probably can for a while, but one other point I've made repeatedly on this show in the past is that one of the reasons why you have to burn your textbook is it doesn't have anything to do with politics in it, which is an absolute nonsense, as we all know in the real world. And if we're going to have central banks trying to bail out the rich again from where we start now, then it's basically pitchforks and burning torches we have to be aware of, and protectionism, etc., is just one aspect of that. And I'm really not sure how markets are going to be able to ride that out. We've seen some of the volatility in currencies, in bonds, in equities, when we've had these global risks like trade war, etc. And I think we'll have a hell of a lot more of that if central banks really think that more of the same is what's going to get us out of it.
Okay. All right, Michael. On that note, we're going to let you go. Thanks very much for joining in and giving us that quick global perspective. Just want to point out that the Federation of Auto Dealers has in fact come out with a statement, or the March vehicle registration data. So they have mentioned that it is in fact the worst for the auto industry, according to them, is now behind us. Expect plateauing of the declining demand and expect sales to stabilize in their current normal range for the next 4 to 6 weeks. And most importantly, inventory levels have reduced across sentiments. So passenger vehicles now ranges from up to 40 to 45 days. Two-wheelers range from around 45 to 50 days. And commercial vehicles is currently at around 40 to 45 days. Remember that inventory levels had risen much above average, for some of them even going to 90 to 100 days. So this is definitely much more positive in terms of data and statements which are coming in from FADA at this point in time.
We have the SIAM representative joining us at 11:40. SIAM yesterday, that is the OEM industry body, put out their outlook for FY20, and they're expecting I think 3 to 5% growth in auto volumes for passenger cars, and I think 5 to 7% growth for two-wheelers, right? I mean, so that is still a pretty sedate outlook for FY20. And the dealers are, it's absolutely, it's nothing negative, it's certainly incrementally positive, but when dealers say, well, worse is behind, it could and we'll get to talk to FADA in a bit, but the point is, the system inventory has reduced a little bit, but will the sales velocity and volumes pick up? I mean, that doesn't necessarily have to be true. I mean, you can keep inventory at a certain level while production cuts, etc. Right?
Exactly,
so that's the whole point. We'll ask those questions to SIAM, of course, at 11:40, and I think we'd get to speak with FADA as well. Yeah.
Yes, but at least a couple of the statements being positive, such as expect plateauing of declining demand at this point in time and normal range in terms of demand for the next 4 to 6 odd weeks. But maybe we'll get Sonia in to give us more color in terms of what FADA is saying. As of now, let's go across to Manisha. She joins in with a check on what she's tracking in the commodity and the currency space. Manisha, over to you.
Thank you so much for that, Ekta. Well, we are looking at various global cues in the Indian and the international markets as well, and that really seems to be weighing on to the prices. But there is an important event to keep an eye on as well. And remember, there is code of conduct on as the general elections begin from tomorrow. And ahead of that, we have seen various confiscations of cash and jewelry as well. So there was a presentation yesterday from the jewelry industry to the Election Commission asking to ease the way the work will be done during the general elections right now. So we understand that the Election Commission has said that they will issue guidelines on documents that will be carried during the transit of jewelry. Now remember, much of the gold and jewelry and diamonds also for that matter are carried on person, and there are various checkposts, whether it's by person, whether it's being carried by road, on airport and railway stations, etc. And there have been reports of some confiscation of jewelry as the code of conduct is on. Joining us to talk more about that really is Ananta Padmanabhan. He's chairman of GJF. Ananta, hi, good to have you. What really has been the conversation with the Election Commission? Because we understand that the confiscation of jewelry has happened in Coimbatore is the reason that you approached the Election Commission. But there have been these kind of instances also reported in other parts of Tamil Nadu, in UP, in Madhya Pradesh, etc. as well. So what really has been the whole conversation from Election Commission as of now?
Yeah, we had a very cordial speech with him, a very cordial meeting with him. We explained him the problems the industry that is facing, especially the goldsmiths and the middlemen who have been carrying jewelry See, it's not done in one workshop. The jewelry has to be manufactured at one place, and then for cutting, polishing, it has to move to various places. And then from the manufacturers, it moves to the retailers. There is a lot of gold movement in the transit, and because of the code of conduct, and these checkposts are becoming a very big hurdle for the industry. Not only they're stopping us, not only they're going through the papers, but still they're seizing it, and then they say we will move it on to income tax department. So again, it takes another 2 days and 3 days. But last 4 days, the incident that happened in Coimbatore is shocking. 149 kilos of gold bars that came out of Brink's vault. It's from the bank. Everybody have bought from the bank, and it is going for delivery. There is nothing for it. If they just see the papers, they could have released it. So we have requested to follow all the norms. So they said definitely they will.
So Ananta, what is your sense on what documents do the jewelers or the staff carries right now, and what is Election Commission now telling to you on what documents will be mandatory for you to carry from here on?
See, we normally carry the issue vouchers, but they are insisting us to carry the stock registers, which is not possible on day-to-day basis. It becomes very difficult, and you know, person who is looking into that stock register will come to know how much of gold we are carrying, and there is possibility of leakage, and so security aspects are there. So we have highlighted that is not required. We will carry a copy of all the paper documents, and you can take those documents and release the goods, and then you can refer it to GST or to the income tax department. And when there is any difference in that, they can come to the premises for checking. We are always there.
Okay.
Nobody's going to run away.
Ananda, also tell us on how long is the Election Commission now going to issue these guidelines? Because we understand the business is on, the code of conduct also is on. So how many more days or weeks as before we actually see those new guidelines come in from EC?
New guidelines in this situation, I think it's very difficult. It's going to be very difficult. But I've also proposed one more thing, that after the elections, let us sit and work on an SOP for both the industry as well as to the Election Commission, so that in the coming elections in the states, every 6 months we are going to have elections across the country. Each state is going to go for election, and again the industry will face the same problem. So I have also requested, and he obliged. He said after the elections, please do come. We will sit, we'll discuss. When they'll also be free to discuss, and once it is set, from next onwards, it will be very easy for the industry. But for time being, we hope that they will send some positive signal to their state election commissioners.
So until then, Ananta, what is really going to be the way forward from here?
It's going to be very difficult, but luckily most of the South India is going to complete by 23rd. So the hassles will be only for the next 10 days, but the rest of the country is going to be very tough. But to my knowledge, there's not much of big incidents where they have seized and kept it for a few days and all that. Only thing, they're going through this trauma for 24 hours, 36 hours like that. Even that we would like to overcome. Let's see. We'll wait for a few more days. Otherwise, again, we'll approach them.
All right, Ananta, thank you so much for joining us. So there are some instances, and as he mentioned, 149 kgs in Coimbatore held in one confiscation itself. So I think jewelry industry, for one, is going to face some issues going forward as we have the code of conduct.
Okay, all right, Manisha, thanks very much for that. But let's get back to that FADA data which we were just referring to from the auto space. Sonia now joins in. She's poured through the data and the statistics, and she's with us to tell us more. Sonia, is it looking like maybe a little bit of light at the end of the tunnel?
Well, at least the Federation of Automobile Dealers Association thinks so. They put out a data where they, have given the March registration data. Now, remember, this is different from the billing data that the auto companies release, which has been under pressure. But the registrations have definitely picked up on a month-on-month basis. They say that the worst of the auto industry slowdown is now behind us. The demand is still declining, but they expect a plateauing of the declining demand as we go ahead. They expect sales to stabilize in their current normal range for the next 4 to 6 weeks. And the important bit is that inventory levels have gone down. Remember, last month, FADA was talking about inventory levels in the passenger vehicle space as high as about 60 to 80 days. In the two-wheeler space, as high as 100 to even 150 days for some of the two-wheeler players like Hero MotoCorp. In today's release, they mentioned that the current inventory levels are in the passenger vehicle space at 40 to 45 days. In two-wheeler space, 45 to 50 days, which is a big drop compared to what we saw last month. And the commercial vehicle space, the inventory levels have fallen to about 40 to 45 days as well. They say that the inquiry degrowth has not been as much as the actual retail sales degrowth. So inquiries have picked up and registrations have gone up on a month-on-month basis as well. They say although the current customer sentiment is negative to neutral for any purchase decision, the consumer interest towards the automobile sector still remains quite robust. Now, what this means is that, purchases have perhaps been deferred to post-election time. This generally happens during election time. The buying, drops and people take their decisions post-election, and that's what FADA is referring to. They talk about how total vehicle registrations have gone up by 8% month-on-month at 16.8 lakh units. Passenger vehicle registrations have gone up by 5%. Commercial vehicle registrations have gone up by 2%. But importantly, two-wheeler registrations have gone up by almost about 10-odd%. So that's the positive. Now remember, this is very different. As I said, this is only registrations. The OEMs talk about billing, and OEM, when they say billing has slowed down, it's billing to the dealers. This is really the registration to customers that FADA is talking about. But they believe that the worst of the slowdown is now behind us in the auto sector.
Okay. All right, Sonia. Thanks very much for that. So positive information or maybe indication which is really coming out from FADA at this point in time. Well, for the markets, absolutely flat. The mid-cap index is just about holding its head above the water.